Hi, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. I'm joined by Joe Camp of Comstock Investments, and we're going to summarize what took place in the ag commodity markets on Wednesday. Lots of volatility in some of these commodities, not so much in grain and livestock, maybe as much as energies. Whoa, we'll talk about that in just a second. As a reminder, make sure that you like this video and click that bell to be reminded when we have new episodes out there. You can subscribe to us and then share this video with others too. All right, Joe, the thing that really stuck out at me of all things today was crude oil that seemed to, pardon the pun, be on fire on the market on Wednesday, ran away from everything else. Any news on that front?
Definitely a response to this overnight news extending from yesterday about some attacks by Ukraine against these refineries in Russia. And so we continue to see those commercial oil interests in Russia being a point of target, and that being a disruption for the international oil trade, something that's certainly causing this market to jump here a couple of bucks higher here throughout most of the session, back testing north of $80 per barrel for WTI crude futures. Also some help today from the weekly petroleum stocks update, where we had U.S. inventories draw down instead of an anticipated build for the week. So a friendly oil market, as you mentioned, not necessarily something that's fully spilling over into something supportive for the grains, but we did see the link to higher soybean oil prices in particular, and something that if it continues, the strength for oil and then eventually fuel prices, that could be a reversal of what has been a bit of a more negative storyline, which is tighter margins for biofuel production, both on ethanol and soy-based biodiesel and renewable diesel.
Seems like soybeans, they kind of rallied through most of the day and kind of tailed off a little bit right before the close. Corn, on the other hand, if I look at a daily chart on corn, it was whipsawing all over the place. And it looked like maybe it kind of failed in the last half hour of trade. What does that mean?
Both sides of unchanged here, ultimately finishing fractionally mixed with some spreading, bringing down the nearby couple of contracts, but lifting the deferred months. So a back and forth, but ultimately within a relatively tighter range. You mentioned not quite so volatile for these grains. This would follow up from our Tuesday session, where you had a really rare occurrence, basically the 7 most active corn contracts from May out to next July, settling exactly unchanged for the session. I think it fits with, if we look at a daily chart on corn, the fact that we've come up towards the top end of the recent trading range. We can show the basic Bollinger Bands, a couple standard deviations away from the 20-day moving average, and we're now testing the top end of that channel. So a good rebound here is one thing I'm watching. The short-term technical influences are important here. The fact that nearby corn futures or the most active May contract has now bounced about 35 cents from its late February lows, and for soybeans, the May contract up about 60 cents. So that's a material rebound. But if we look at the charts, whether it's daily corn futures or daily May soybean prices, you still see that it's a bit of a blip on the radar compared to this longer-term bearish trend we've been in. So more work to do, certainly, on the charts.
Yeah, on the soybeans, it looks like they tested that long-term low that we had quite a while back and went below it for a little bit, but then it rallied above it. Do you think we're going to retest that then or not?
I like to show that line because we got down to that level. We stuck there a bit, and then we probed lower, as you mentioned, but had no real follow through. And I think that can be key because, these technicals aren't going to be exact by the penny. And in fact, they can push through these key levels, like the roughly 1150 mark from last summer where we bottomed out. And then it's like, certainly those speculators that have so much money behind these chart patterns, they're saying, all right, who's left to sell this now? And they didn't have any takers, for now we're watching that speculative position closely as it involves these technicals, because of how it sets us up going forward for some potentially heavier short covering action. And that is something that's important because of what we just learned on the latest trader positions report out last Friday, that through last Tuesday, the hedge funds had built up a record net short position in soybeans. But yet, again, after some 60-cent bounce, you see some of that short covering taking place. And again, maybe setting us up for a more considerable retracement or rebound type of rally into the spring seasonal.
You were talking about the attacks taking place against Russia from Ukraine, and I really thought that would support the wheat market, but it didn't seem to here on Wednesday. I want to get your thought on that, on why we're not getting more market reaction to something like that. Also, a quick tease, a shameless plug here, if you don't mind. I'm going to be talking tomorrow with the president of the North Dakota Grain Growers Association, and we're going to talk about the prospects for the spring wheat crop and the barley crop this year in the northern U.S. That could be interesting too, but how do you look at the makeup of the wheat market overall right now? I know spring wheat still has a premium against the other two, but what's going on with the Russia connection?
Unfortunately, I think it's a bit of a tired storyline and a boy who cried wolf type scenario to say that we've been tracking now for over 2 years this possibility of a bigger disruption. And there have been points where we say, okay, Russia's targeting grain facilities. Russia is threatening action in the Black Sea and to disrupt shipping channels after they recently dismantled that Black Sea trade deal. Yet we see it in the volumes that there's been no real considerable downturn. And in fact, there's, more grain by all accounts moving out of that region at cheaper prices than there were before the war. And, I think that in part is something that's tied to Russia and that country wanting if it's implicit, the tacit support of the Chinese and other major players saying to Russia that, you can move forward with your invasion, with your war, but don't let it disrupt food exports. And that's been the case where it hasn't disrupted food exports in a big way. And again, we see that Russia has led the market lower in terms of lower wheat prices, and that corn continues to be near the bottom on corn prices and competition for exports there. It doesn't help here lately. The talk of the wheat trade has been that China has canceled these previous U.S. wheat purchases, those that were made at levels some $1 and a quarter higher than where we're at now. So it's been really pretty negative for wheat, and that's been an extra source of headwind for these row crops. Whereas I talk about nearby corn futures jumping some 35 cents from their February lows, soybeans up 60 cents. Well, wheat's just put in a fresh bottom here this week, and you see it actually down about 30 cents from that same period in late February when the corn and beans started bouncing. So got to keep an eye on wheat and wonder if eventually the Russian market can bottom to help relieve some pressure on our own market.
Well, and speaking of the Ukrainian connection, I know I keep hearing more reports about farmer protests in Europe, where farmers are upset about Ukrainian wheat making its way through Europe and kind of ruining some of the basis in some parts of the continent there. I'll be doing a two-part story on that next week, so be alert for that. That'll be coming down the pike here. Also on the livestock trade today, it looked like the cattle market kind of perked up. How come?
Yeah, back higher here where, we've had the opposite in some sense these last couple of weeks of what we're seeing in the grains, whereas those speculators had been short and they're covering some of that position. In the livestock, they've been long. They've added to their net long position in live cattle, feeder cattle, and hogs for that matter. But they've been a net buyer for 2 months straight. So taking a little bit of money off of the table as those technicals looked a little bit toppy, but yet back higher and room to retest these highs today as we're back to talking about pretty firm cash markets. They're going to develop more fully today, but what has traded is at steadier, higher levels from last week. And it's still on the basis of the same fundamentally bullish storyline where we have tight fed cattle supplies and really no pushback from demand. Consumer demand robust, and we can see that in the box beef prices, which make for good margins and flow back into those higher cash bids we're likely to see this week.
Nearby feeders had a big day, but do you consider them overall to be in more of a consolidation mode right now?
I do. Yeah, we talk about live cattle futures making new highs. Relatively speaking, the feeder cattle are several dollars off of their recent tops. Same thing, though, talking about that cash feeder market, as hot as it is, we've got room to potentially catch up. But you do have, especially those deferred contracts, poking out to towards new all-time highs that have garnered the response from some short hedgers, at least for now. And that's probably been the case for the nearby contracts more so than the live cattle these last several days.
And to me, the lean hogs almost look identical to the feeders on the chart.
Yeah, the fact that you've got these big premiums out into the later contracts, that's not unusual by any means. And it does fit the current outlook for this year that production would be tightening into the summer months. But you are talking about cash prices, a wide range there. But if they're in averaging low to mid 70s, these summer contracts at 101, 102 represent quite a premium out there. And so it is similar in structure to what we're seeing in this cattle market.
Well, we have the big planning intentions report coming up on March 28th. I guess that could be a pretty big report. Do you think that has potential to maybe mark a turn in the markets?
It certainly does. If we see that producers are going to plan to respond to lower prices in general and maybe hold back on some of these row crop seedings, there's been the expectation that in the South there could be a bigger shift to cotton. We've brought that up here before on the show. The higher prices there leading to some extra interest that would maybe take away from corn acreage. The flip side of it is that there's a lot of areas across the U.S. that are really ready to go with some favorable conditions here leading into the spring, following up from really pretty good weather in the fall to make light of that prep work and support where we could be planting more corn acres than we had expected, which was the consensus that we're going to see some shift away from the high corn acreage relatively from last season over to a few more soybeans. But yeah, at the end of the month, that'll be on the 28th this year, Thursday, that closes the week before a 3-day weekend because of Good Friday being off for the holiday.
Good point. Good point. Well, I tell you what, I enjoyed talking with you about the markets, and I'll have Brienne bring up your contact information if somebody out there in the audience wants to get in touch with you. I encourage them to do that, and of course, I'm sure you're open to questions too. If they want to forward any questions your way, you'll be glad to respond to them, or we can address them right here on the podcast too. Joe, I appreciate it. You have a good day. We'll talk to you soon.
Same. Thanks.
All right, Joe Camp, he is with Comstock Investments. That'll do it for this episode. Thanks again for tuning in. Appreciate that. For producer Brienne Hendrickson, I'm Marlon Bowling. Catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well.